Hello everyone, welcome to Monday, March 18th edition of my YouTube channel. Um, Last week didn't end so well. Started out the week good and had a couple bad trades at the end of the week. But I made a couple trades this morning, actually three trades. Uh, Two were real money, one was a paper trade. So before we get to that, I'll let you know what I was looking at before the open, and I'm going to be completely upfront. I should have played these, but I'm so comfortable playing spy that I don't I'm not as comfortable playing other things. But looking at, forget this candle here because this wasn't here before the open. We had a bearish engulfing candle here, it's a long wick, and then pretty big red candle here. So I was watching square. I wanted to watch square for puts near the open, and come over here and see what happened. At the open, it dropped pretty hard, so that was one that I had on my list. I had Disney and Baidu for calls. Again, based on the daily chart. You see we had, forget this candle. I wasn't as comfortable with this chart, but we had a good sized candle here. It's almost a piercing line. And then we had another nice big green candle here, although it's more of a spinning top with a long wick and long tail. But it is a pretty good sized body. So I had this on watch for calls this morning. It would have worked out because even though we dropped hard overnight, I would have got in. Probably would have waited for something closer to here. So I don't know if this would have even worked out for me. But we had a nice pop here. If I would have got in any time here, could have had a nice gain here. You see we came up and tested this pivot point and had a long-legged doji, and you see what happened from there. So yeah, that one probably would have worked out if I would have got the right entry. Let's look at Baidu, the daily chart. You see the daily chart here, kind of sloppy looking chart, but you see we made a new high here with a nice big green candle. We also gapped up from here. So I was looking at calls here. I had this on my list. Again, I'm just more comfortable trading SPY just because of how much I've traded it. I really need to start looking into these other ones too, but the same thing here. If I would have jumped in here, I might not have. I don't know when I would have got in. Ideally, I probably would have waited for this, but I don't know. Maybe I wouldn't have liked what I saw. You see the stochastics were coming down. I don't know, but it's just something I had on my list, and if I would have timed them right, any of those three would have worked out for me. But let's take a look at SPY. Still waiting for SPY to pull back, but I don't know. I'm not sure if we're going to get that much of a pullback at this point. But at the open here, we open right above the 100 and 200 simple moving average lines. I put a bid in, and the reason why I put a bid in at the open was because the stochastics on all three of my time frames were all pretty low. You see right here, right at the open, we were down here and oversold. The 10-minute we were down here at oversold. The 5-minute we were down here at oversold. So my plan was to get in pretty close to the open when I felt comfortable that we weren't going to fall down. I put a bid in on March 20th, 282 calls. I put my bid in at 92. Let me see here. What was it? 95 cents. Put my bid in at 95 cents. I didn't get filled. 95 was right about in this range here. Let me pull that screen over so you can see what that looked like over here. My bid was for 95 cents, which was right about here. And you see it ran up to $1.45. I didn't get filled. Shortly after I didn't get filled, I canceled my order. I wasn't going to chase it, and kind of, in hindsight, well, I kind of wish I would have chased it, but oh well. I don't want to get into that habit because most times it probably won't work out. But anyway, I had an order in for calls right about at this level here. Would have been 50% winner there, but it didn't work out. Let's take a look. I also had I bought calls, real money calls at 11:40. So you see I got in right here on this candle. And the reason why is because we came down here and bounced right off of yesterday or Friday's close and almost touched the pivot point. And we had, it wasn't quite a hammer candle, but nice long tail. I jumped in pretty much right at the open of this candle. I paid 92 cents. I bought 4 contracts. I sold 2 of them at 98 cents and the other half at 95. Base hits, probably more like bunts, but I bought them at 11.40, sold at 11.50 and 11.51. So you see I bought them at 11.40. We're over here. Bought them at 11.40 for 92 cents, which would have been right about here. 92 cents. I sold half at 98 cents at 11.50. So that would have been this candle here, right at the open of this candle right here. I sold half. And I sold the rest at 95 when it started to pull back. I just didn't want to let that go red on me, so I got out. I paper traded calls. I believe that was at 12.40. Let me look at my other screen here. Filled orders. I bought 5 SPY calls at $1 at 12.40. So 12.40 was right about here. This wasn't the best risk to reward, but we held this level here pretty solidly. I was banking on that being pretty good support, but we also had the 200 simple moving average and today's open. So I got in at 11.40. All right, I'm sorry, 12.40, right at the open of this candle. I paid $1. I bought 5 of them. I sold 3 of them at $1.10, right at 12.55. So right here, I sold 3 of them, and I sold the other 2. So I got 10% on those 3. And I sold the other 2 at right at 1 o'clock at $1.05. So right at the open of this candle at $1.05, I sold these ones. This was a paper trade. So then I went back and saw another opportunity for real money, well, real or paper, but I decided to go real money at 138, 1338, which would have been shortly after the open of this candle, because this candle opened at 1335. I got in at 1338, so it was probably right in this range here. I paid $1.08, the same calls, Wednesdays, 282 expirations. I paid $1.08, and at 1343, which would have been roughly halfway through this candle, 1343, I had 4 calls. I sold 2 of them at $1.14. Another small, more or less a bunt. And at 1351, which was right at the open of this candle, shortly after the open of this candle, you see it opened here. It pulled back a little bit. I sold the other 2 market orders, sold the other 2 to $1.13. So on those, I figure my average was about $1.13 and a half. I probably made about 5% on those. So 2-0 real money trades today, 1-0 paper trade. It's kind of how today panned out. Not big wins. I think I'm up. Let me see. I'm up $40 today on SPY in real money. Plus the paper trade, I was up another 40 in that one on the paper trade. But more than anything, Thursday and Friday didn't go too well. I wanted to get back on the horse and get back on a winning streak. Sometimes it's important to do that. Just get a couple wins under your belt after you have a couple losses, just to get your confidence back up. Get back in rhythm. Don't think I'll take any more trades today. It's too late in the day for me. But that's kind of how today looked. You see, we have 3-minute, 5-minute stochastics all coming down into oversold, but the 10-minute still in it just coming out of overbought. So usually what I kind of see happening in this situation, shorter term, we're gonna have a little bounce here just because of stochastics. We're gonna have a little bounce, maybe bounce up to about here. That'll get these stochastics up out of oversold, and then we'll turn around and come back down to let the 10-minute keep coming back down. It doesn't always happen that way, but that's kind of what I look at. I try not to enter trades unless all 3 time frame stochastics are all in line. So even with a bounce here, I wouldn't be likely to get in calls because the 10 minutes still coming down. I don't let this be the final determination. The stochastics is not my final determination, but I do take that into account when I'm looking to get into a trade. So as for today's SPY chart, we came up, like I said, we came out here nice open, right at a lot of support here. I really like that, along with the stochastics. I really like that. We came up, we popped right through the first pivot point, as well as yesterday's high or Friday's high. Came up, we broke through the recent high, which was 282.34, I believe. Popped right up through that. You see we had a big bearish engulf and came pretty much right down to support again. It bounced, it kind of held this support for a while, and we came up here, and then we finally lost this support. And when we lost that support, we fell right through both moving average lines, all the way down to Friday's close. Almost touched that pivot. So more often than not, you can play from pivot to pivot. It doesn't always work that way, but obviously we didn't come all the way down to pivot here because it was the open, but we went up to that pivot. It's in a way, it's kind of like the pivots are the magnets. We broke through this pivot all the way down, came down to this pivot, came back up right to the next pivot. If you're patient enough to hold these, and to do that, you kind of need a longer time frame. 5 minutes is going to chop you out of these. You look at the 10-minute chart, you go from pivot to pivot, and the pivots are the same whether it's 3 minute, 5 minute, 10 minute. The pivot levels, the price levels the pivots are at are still the same. So you see this pivot, this is where we came down, almost touched it, and we went right back up. If you follow a 10 minute, it makes it a little bit easier to stay in. You see the 10 minute chart, pivot to pivot. It's something try paper trading, or just go back and do some back testing and see. A lot of times you'll get shook out. I did today. I usually do, because I look for base hits. You play this from here to here, you're looking at let's see, if you would have got in right here, these calls were trading at 90 cents, and up here they made it all the way to, I gotta scroll over. I'm looking at my other chart here. Slide over so you can see what I'm looking at. So that's still off the chart. Right here at this, at 1140, which was what was my entry on my one trade, my paper trade. 1140 would have been your entry. It would have been 90 cents, and you made it all the way up to $1.19. That's 19 cents on a 90-cent trade. That's 21% gain. Not shabby. I don't generally hold them that long. Like I said, I go for the base hits, but you could have a 20% win from pivot to pivot if you would have held it. But you don't know. It could have came up here, and you could have saw this, and it could have came right back, and you would have never got your pivot. But that's why you kind of have to be ready on the sell. That's why I like selling half. If I would have stayed in the whole time from here to here, I would have probably sold half, at a minimum sold half here. Sold half and see what happens. But it's just different ways of looking at it based on time frames. The 10-minute won't shake you out as bad. But anyway, that's it for today. 2-0 real money SPY trades and 1-0 on paper trading. So I'm going to work on trying to be a little bit more consistent this week, toward the end of the week. But I got something in my throat. So you see, we're getting that bounce here that I talked about. Let's see if we can bounce up to this, about the 282 level. There's the 282. See how high we go. We might get up to 282.05-ish. And then I'm going to guess we're going to bounce back down. So let's see what happens. I'll leave my cursor right on that 282.05. And we might go higher than that. I'm not saying that that's a firm turning point. Just kind of based on the candles and the EMAs, the 3 and 10 EMAs. Kind of look at 282.05 as going to be some resistance. It might make it to 282.10, but either way, I think we pull back some once we get to there. I could be wrong, and that's mainly because the 10-minute stochastics are still pointing down, which tells me that we still have more room to drop. Still need to relieve that overbought condition in the longer term. So let's see, we're creeping up to that 282.10, and who knows, we could blast right through to 283. We don't know that. You see what happened to me Friday, and that was my fault. I saw it coming. I said a couple of times in the recording that I said it's either going to pull back or it's going to pop big, and at that point I should have just sold, because it wasn't looking too good for me. But stubbornness, not wanting to be wrong, I decided to stick in, and then I couldn't get out. I did a market sell and I couldn't get out, so it ended up being a lot bigger hit than I was not hoping for, but a lot bigger hit than I was wanting. But that's why you trade with a reasonable amount of money. Don't go all in. So yeah, we're still, so we might break that 282.10. We might end up going back up to that pivot point. Let's see what happens. I still think we pull back some before the close. And well, it's already 3:18, so let's see. I called 280. I said 282.05 to 282.10. Let's see if that holds. I think at that point we'll pull down to the 281.70s, 281.60s. So we got that's a big bullish engulfing candle right off the support. So I don't know, it could go up and break that recent high. Yeah, I put that bid in at the open at 95, and I think by the time I hit the button, because I looked at the chart, I looked at the price action, and at that point I checked my stochastics, and by the time I looked back up, it was up past where I was wanting to buy in at. It was already, I was looking to pay about 95, and I think it was already at 97 or 98. Yeah, I was just a little bit too slow. I should have already had the stochastics in mind before that, but I didn't, and I missed that bid. And I don't leave the bids out there. If I don't get filled, I cancel it usually pretty quickly. And it would have never came back down to fill me anyway. I watched it; it never came back down to that 95 until after that run was over. But yeah, it would have been a nice way to start the day. Nice big open there. You see this bullish engulfing right here. Your stop, from a technical standpoint, your stop out on this would be a close below the lowest of the pair that make up your engulfing candle. So below this. So you would have to close below this candle, below 281.84 for a technical stop out. Now you might not want to let it go that far, because there has to be some point. There's a pain threshold that you say, that's it, I can't, because let's just say this candle, this tail comes all the way down to here. Well, you don't want to hold all the way down to here and take that. That's a pretty big size hit. But you have to make that determination yourself. But from a technical standpoint, a stop on an engulfing candle, bullish engulfing, is the lowest low of the pair that make up that set. Same, just the opposite here. Bearish engulfing, your stop would be a close above the highest of the two pair that make up the engulfing candle. So your stop, from a technical standpoint, the stop would be above here. So we're getting that pullback. Let's see how far we come back. We made it that to what, 282.11? So 282.11. Let's see how far we come back now. Now if we come back, I think if we close below this moving average, then we'll get the pullback. I don't even think that we have to close below this tail. I think just close below, and this will be some support. I mean, if we close here, the next candle is going to have a little bit of trouble here. But I think if we close below this, this won't be that much of an issue getting past this tail. And then we get the pullback to, and there's actually some pretty good support here, because we have this candle, the high of this candle here, plus the low of this candle, and the low of that candle. So that's a pretty good support area. Right around the 281, 82s, 83s, right in that area. Pretty good support right there. So let's see. That's about all I really have to add to this video. I just wanted to stick around and commentate on this, what's happening here on the screen. See, this wouldn't be a good risk reward on this bullish engulfing, because your stop out's way down here. Even if you don't want to stop out there and you want to stop below this moving average line, that's still a pretty big stop out for your risk, and your reward is only from here to here. So you're less than 1-to-1 risk reward ratio. So that's not something you want to jump in on anyway. Now you may want to jump in if you feel that it's going to continue upwards. This wouldn't be as bad of a spot to jump in calls, because your risk now is here, and if you're still honoring this bullish engulfing, your stop out now is here, where your reward is up here. So it's a little bit better risk reward ratio. Either way, I still would not enter right there, only because I just think that 10 minutes still showing more of a pullback coming. And that's kind of how you have to look at it. The 3 and the 5 minute are shorter term. 10 minute, you're starting to look a little bit longer term. You'll have many within a 10 minute candle. You could have many ups and downs, but you don't see that in a 10 minute candle. You might have 3 up and down surges in a 10 minute candle, but when you look at a 10 minute candle, you don't know that. Take for instance this candle. We might have opened here, could have pulled back to here, bounced back to here, pulled back to here, bounced back to here, and pulled all the way back to here in that 10 minutes. You don't know that unless you look at a smaller time frame. So it's very possible that looking at shorter time frames can definitely stop you out of a trade. But that's why, if you're looking for a real short pop, it's okay to look at 3 or 5 minute charts. 3 minute charts especially. I think a lot of people look at the 5 minute. 3 minute, I think it's more or less, I don't do entries on it based on a 3 minute chart. I look at 3 minute chart to see what happens a little bit faster time frame, or what might be coming up. Something you might not really see on a 5 minute, or definitely not a 10 minute. So let's see. We got a nice little pullback right here, but didn't quite come down and break this. So let's see if it does it here. Like I said, our first obstacle is going to be this 100 simple moving average, and then we're going to have a little bit of an obstacle here, 281.80s, low 80s, and from there, once we break this 281.80, then I can see us definitely coming back to here. But we have a few other ones to get through first before we get to that. You see the stochastics curled down on the 3 minute, starting to curl down on the 5 minute. So if this candle's starting to pop though. If we get a few, little bit more pullback, and get all three stochastics pointing down, that just increases your odds of it going in your favor and go to the downside if your inputs. So let's see. I'll cut this video off here before too long, because I don't want it to be too long of a video. I know when they're too long, you just don't want to watch them. So anyway, that's what I'm looking at. If we can get down below this, then I can see us coming down at least to here and possibly to here. But it's, we're going to see what happens in this range. If we pop up to here, then I'd say it's too early for that pullback, and it's not going to happen yet. It might not even happen today because it's already 3:30. But I just look for a little bit of a sell-off. It's a pretty flat day. The ES mini futures are only up 5 points right now for the day. It's not real big. The Dow futures are up 7 points. NASDAQ futures up 7 points. So it's a pretty flat day. So it's kind of hard to say. I think we're just in a consolidation mode right now, not really knowing which way to go, up or down. So it makes it harder to play at the Open. You look at the chart. Look at today's chart on the daily, and it's hard to say which way we're going to go. We had a nice pop, made a new recent high, but we also have a long wick. So where are we going to go from there? I don't know. I still think we're looking at a pullback. A couple dollar pullback at least. Maybe down to about 279, 280. See, we do have lighter volume today, but it's hard to say. You trade what you see and not what you think. Okay, here's a little bit of a pullback now. Let's see if we come down and break down through here. See if we get that follow through that I was talking about. You go back, I called 282.05 to 282.10 range for a reversal, and we hit 282.11, so I was pretty close on that. Close enough I'd be okay with playing that. Just seems to be when I'm actually in it, it doesn't work out. I don't seem to be as accurate. But this 100 simple moving average. I know not a lot of people use it, but I like it. See right here, there's actually a 50 there, which I don't know why there's a 50 showing. Yeah, there's a 100. 100 simple moving average holds a lot of support. 1, 2, 3, 4, 5 candles in a row have held that line. Not a lot of people use the 100. I like it. I find on SPY at least it works pretty well. I don't really use the 20 and the 50. They don't. 20 and the 50 just don't offer. I don't know. Don't seem to be as accurate for me as far as support and resistance levels go. I know some people play the crosses, moving average crosses. I don't play those. I do use the 3 and the 10. I shouldn't say use them. I have the 3 and the 10 cross charted right here, these spikes, but I don't really play them. I just have it noted down here. But as far as like 50, 200 cross, golden cross, whatever you want to call it, I don't play those. Usually it seems like by the time they cross, the move's too far in, too far along, and once you get in, there's a little bit of a pullback. And yeah, you could pull it back, let it pull back to support level, and then jump in. But usually by that time I've moved on and forgot all about it, and I'm looking at something else. So I just don't bother with them. But I'm going to go ahead and end this recording. But keep an eye on this. You see it's 3:30 right now, 3:32. Let's see what happens here the rest of the day. See if we end up losing this level and pulling back. So I'll see you tomorrow, and happy trading.